everyone, and welcome to my morning report analysis videos on Thursday, 25th of January with me, Rich Market Analyst at Hantec Markets. The dollar got smashed yesterday, absolutely to smithereens. We had comments from US Treasury Secretary Steve Mnuchin that suggesting that they were comfortable with a weaker dollar because it helped on trade. Subsequently, the dollar got absolutely slammed. Below 90 on the trade-weighted dollar. That is a 3-year low. And also, sort of dating back, so below 90, massive top pattern on the dollar, subsequently. And you've not really got any real support until 84 area, really, on that dollar. So, yeah, it's been down. It is stretched, massively stretched near term. But you would argue whether it was going to continue to go to the downside. I mean, the ECB meeting today could well be a game changer for this, because I think Mario Draghi is going to be looking at this stronger dollar that we've played out over the opening weeks of January, and since the ECB meeting back in December, the euro dollar has actually moved higher by about 600 pips. So that's a significant move, and the ECB are likely to look at that as being too fast and may well start to try and jawbone it lower a bit, and you're likely to see they were talking in the minutes about the fact that early in 2018 that they would look to revisit their forward guidance. Well, I think they're likely to push it out until the March meeting anyway, but Draghi is likely to strike a bit of a dovish tone today, and that could start to sort of weigh on euro a little bit. But certainly the dollar is still under pressure. You can see that today across these forex majors is still trading lower across the board, and not anywhere near as weak as it was yesterday, but it was still down. Now the S&P 500 sort of consolidated a bit yesterday, but equity markets in the European trading session yesterday were sharply lower and sort of mixed a bit today. DAX is lower, but FTSE is sort of held up a touch, but we've still got this sort of possibility of the fact is that the US is moving towards protectionism, with Trump's putting tariffs on washing machines and solar panels, and that has sort of started to sort of eke into these gains a little bit. Although the S&P 500, as I said, just still sort of holding up, but it's still at pretty much record levels of being stretched against the 144-day moving average. It's around about 10% stretched at the moment. So, yeah, really interesting that is the case. So, today I think focus mainly on the ECB, whether the ECB and Draghi can sort of turn around this dollar weakness that has been flooding through the markets. Gold broke out above 1357.50 yesterday. Oil also pulling higher on the inventories yesterday. The EIA inventories were showing that the crude oil stocks drawdown continues 10 weeks in a row now on the EIA inventories, although possibility now that signs of that drawdown sort of may be coming to a close, but it'll be interesting to see what happens next week now. But EIA inventories driving oil higher, as did the weaker dollar yesterday. But generally speaking, a dollar weakness across the board. But can the ECB change that? Now, in terms of data points today, big focus on the ECB. However, we've had the German IFO this morning coming in slightly above expectations, but again, as I said, focus on the ECB this afternoon. So we've got the rates decision. No change on rates expected. Minus 0.4% on the deposit rate. That's not expected to change until sort of mid 2019. It's possible they could change language, but again, very unlikely given the strength of the euro recently. They don't really want to drive that even further higher. So just expecting a dovish tone from Draghi today. So my chart today is euro sterling. Now sterling has had a massive strengthening in recent, or certainly the early weeks of 2018, driven again strongly higher by those comments yesterday. But Brexit is a main driver of this move, and we've seen a breakdown on the euro sterling. That big trading range that we'd seen for the last sort of 4 or so months has now broken down. 87.40 was a big floor on euro sterling, and that closed at the lowest point since June 2017. And that sort of marks a big turnaround, really, and a strengthening of the sterling against the euro. And the momentum indicators are turning more negative now. But can the momentum of this run down continue? Well, I think the ECB is obviously going to be a big driver of the move today. But if the ECB does try to jawbone the market lower, then you could certainly see this euro sterling continuing lower. Now you've got the initial support 86.50, but yeah, we could see a move ultimately if this sort of breakdown continues, which gives you what, 280 pips of breakdown. If you sort of measure those two levels of the range, you could certainly see the market continuing lower, and that's what, sort of 85, 84.50, 85 maybe, and that again is a bit of a pivot on euro sterling. So you could see a move back towards that in the coming weeks if the ECB does sort of try and take the strength out of that euro move today, and you've got continued sterling strength. But near term, you've got the support hanging on 86, 85 being today's low, and above the 86.50 level. But if those two levels break on a closing basis today, you could see a continued move to the downside. So I wish you good luck in your trading today, and I will speak to you later.